just moving on from all the political action to stock-specific news or corporate action. In fact, we have with us the management of Take Solutions joining in. Srinivasan, HR Vice Chairman and Managing Director of Take Solutions joins in. Morning, Mr. Srinivasan. Thanks for joining in. First up, there has been news that Take Solutions is exploring acquisitions in North America and in Europe as well. Give us some more details on that. Have you shortlisted a few potential sort of takeover candidates? What is it that you're working with in terms of, the acquisitions that you're looking to make?
Good morning and thanks for having me on the show. Yes, we are actively scouting for acquisitions in North America and Europe. At this point of time, we have conversations going on with about half a dozen organizations. Very clearly, our interest is in two areas. The first is to enhance our clinical footprint in the United States, which I would say is our category A requirement. The second one is we are also looking at certain niche technologies that will enable us to improve the speed to market and also impact the cost of drug development. So these are two areas where we're looking at acquisitions, and of course I should say that most conversations are in the preliminary stage at this point of time.
Well, from where things stand right now, I believe your intent is very clear. You're looking at these acquisitions. Has any company gotten close to catch your attention in terms of being a potential sort of acquiree rather?
You see, I won't use that term yet. I'd only say that there are companies which fit the space and the geography that we are looking at. But the evaluation is still in a very preliminary stage, and we are in a very early stage of discussion. So I won't say that there is a short list with a serious conversation and that there is a transaction round the corner. That's not the feeling I want to give.
Right. There was some fundraising which was also being planned. Is that more likely for these acquisitions, and what's the kind of timeline that you have on the fundraising front?
So the fundraising is a preferential issue to the promoters, and we are going through the corporate process required for that, including the general body approval through a postal ballot. We intend to complete that process by the 31st of March. So the idea is that we need to have the currency within the system for us to act on an acquisition, because these acquisitions can happen at a particular speed, so we can't time fundraise at that point of time.
Right. Srinivasan, what does the current debt on your books stand at?
See, our current debt is somewhere in the region of 200 crores, but it's about 0.1 to equity. Net debt to equity is 0.1. So we are under leveraged, but we still feel that we'd like to capitalize by equity, and the promoters have come forward to put in the money.
Would it be fair to assume that the money that the promoters are bringing in would be used to retire some part of the debt then?
No, see, our debt, we don't need to retire it now. First, our debt is dollar debt, and it's overseas. So it's not a rupee debt, and we are comfortably servicing our debt. So I don't think that there is a urgency or a hurry to retire that debt. We'll use the money that is coming in to fund the acquisitions.
All right. Just talking about your business verticals then, especially on the life sciences business, what's the outlook looking like? Are there any consolidation plan, especially with regards to Navitas?
Yeah, see, Navitas is a brand of Take Solutions that has a particular meaning to the end customer. And of course, our life sciences business has been the focus of our growth. So if you look at the first 9 months of the current financial year, in rupee terms, we grew our life sciences business at about 25%, and in dollar terms at about 30%. So this is a business that is seeing very strong traction. And North America and Asia have been, Asia recently, but North America largely has been instrumental in pushing this growth rate forward. We anticipate the same kind of growth rate. in this segment.
All right. Looking at your Q3 numbers here, I'm not sure as to the reason why, because all other verticals and metrics have done well, but there was a contraction of about 100 basis points, 1% on your margins. What was the reason behind that?
See, the margin is because we are investing in expanding capacity. See, the company is in a growth phase. So at this point of time, we have to commit ourselves to creating facilities, improving S&M, making certain one-time expenditures. So the impact of that on the margins will be there. But there's another way of looking at the margins. If you look at it year on year, there's still a growth in the EBITDA of about 16%, which is not bad. At this stage of the life cycle, we are looking at aggressive growth of the top line, and I believe we are delivering that.
Right. Very lastly, if we just want to wrap up this conversation and give us a sense of how business is looking, what's the kind of outlook we're working with, and any sort of major growth drivers that we should be aware of?
I called that out. The major growth drivers in terms of geography will be North America and Asia, and in terms of segment will be life sciences. We expect to continue an organic growth rate of anywhere between 22 and 25%. Going forward.
Right. Thanks for that, Srinivasan. Good luck with those acquisition spree that are currently on. Take Solutions.